some companies just don't get nearly enough respect. And that's how I felt about Allergan, the fast-growing big pharma play. It's the biggest one around, frankly. It reported an excellent quarter this morning. It was a 5-cent earnings beat off of a $3.30 basis with higher-than-expected revenue, up 5% year-over-year. More importantly, management raised their full-year forecast for both the top and the bottom line. Company's got a solid pipeline, including 6 drugs in phase 3 clinical trials. Could be worth $13 billion in total sales. Chief reason why we own it for ActionAlertsPlus.com Club. However, Allergan stock sold off hard today, shedding $3.44 because of concerns about potentially weaker operating margins and cash flow that some felt were below expectations. Do not take it from me. Let's check in with Brent Saunders, the chairman and CEO of Allergan, get a better sense of the quarter and where his company's headed. Mr. Saunders, welcome back to Mad Money. Good to see you, Brent. Have a seat.
Thanks for having me.
All right, so Brent, first I just want to go over the things that people heard and said, because I don't think they tell the story, but I want people to understand why a stock went down. First, $1.1 billion in cash flow. Some people thought that you had pretty much said, listen, it's going to be 1.5 to 2, but this was an aberration this quarter.
Right. Well, we did a few deals this quarter, and we had to pay for those deals. We did a deal for Editas for CRISPR technology. We did a deal in the microbiome area. And, of course, we closed the Zeltiq deal. So we had to pay for those, and they were one-time charges, which get removed from the cash flow.
So we'll bounce back to the cash flow that you basically
We do believe in the back half of the year you'll start to see $1.5 to $2 billion in free cash flow.
But not the second quarter necessarily.
It will progress.
Okay.
Yes.
And then the second one was lower operating margins because of you're spending a lot to try to build big drugs here.
Well, that's true. And the second part to that story is Q1 is our lowest sales quarter.
Right.
So the spend stays about even throughout the year, but when you have lower sales, you have lower margins. Right. So put on that a little bit of product mix as we have some higher royalty products growing faster like Linzess than others. That accounts for it, but margins should improve throughout the year as well.
Okay, so I'm going to kind of divide things into the really exciting stuff you have in aesthetics and then just all these other giant possible pipelines. Why don't we start with what's the biggest stuff in the pipeline that you're saying? Because you've got, as always, you're incredibly transparent. You've got in your the development progress of 6 star programs, and it's really could produce some blockbusters.
That's right. Yeah, so we do have 6 programs in R&D that are either in phase 3 or going into phase 3 this year, and 1 or 2 that will be filed by the end of the year with the FDA or other regulatory authorities. And there's some big ones in there. There's Repastinel, a novel breakthrough treatment for depression, huge unmet need, huge market, and we really like the profile of this drug for depression. Very different than current standard of care, SSRIs. Right. We have Abicipar, a new standard of treatment potentially for AMD, back of the eye. We know how big Eylea is. That was an improvement from 4 weeks Lucentis to 6 weeks. Right. This could be 12-week dosing. So big change. Right. And we finished enrollment in that study.
Okay.
We have our new novel treatment for NASH, which we're screening patients for. We'll enroll our first patient in phase 3 shortly. Okay. Very large market, high unmet need, and we'll be moving forward there. Esmia for uterine fibroids. Studies are complete, positive. We'll be putting that file into the FDA shortly. Already approved outside the United States. And then Relomorelin, a first-in-class drug for diabetic gastroparesis. No new drugs for this particular ailment in 30 years. So really breakthrough potential therapy.
To me, it's an insanely large pipeline, much more than everybody has. But I think what people want to hear about is aesthetics, because they know that you're the king of aesthetics, and you've got so much fresh stuff, and this stuff could have huge gross margins. So let's, including what we've got behind me.
Yeah, close call. Well, look, aesthetics was very strong in the quarter. It's been strong for years now, quarter after quarter after quarter.
I felt that there was an acceleration. That's why it was one of the reasons why I was upset that the stock went down, because this is what I thought. I think aesthetics is just bedrock 2017. A lot of these others could be 2018.
Right, but you look at, after putting up strong growth quarter after quarter, year after year, 12% on Botox, 19+% on the Juvederm family of fillers, Kybella starting early in the work, starting to perform. We now have Zeltiq or cool scoping, which is the machine
I want you to talk about this, because I think this is gigantic, and I don't think frankly, some of your stuff, I think that people don't know it yet.
Well, they do, because lots of people are using it, but our penetration rates are so small still. So we have this massive market. We're the world leader, but yet there's so many potential customers, patients out there, and the field is exploding. We're seeing more young people enter the medical aesthetics. Right. We're seeing it become less stigmatized. People are putting it on Snapchat, Facebook, Instagram. We're seeing males start to move into the market. In fact, 30% of all colposcoping patients are men, which is 10% for Botox. So that's a gateway for men.
And how do people get to that? I mean, they'll look at this and say, well, who do I suppose? Do I go to my dermatologist, my general practitioner? I mean, how's
so if anybody Googled colposcoping in their city, they will find a full list of providers. It's available almost everywhere in the United States and outside the United States as well. But also we'll be making it available in our Brilliant Distinctions program shortly, and people will be able to download the Brilliant Distinctions app and find a provider and a place to receive it through that as well.
Because one of the reasons why, of the many reasons why I like the company and the stock, is because there is a selfie generation. I mean, we know you're looking your selfie best. And like, for instance, I would love it if you would buy Align. That's another company I think is doing. But you guys have soup to nuts for how to look better. And that is something that, as we've learned from Align, it gets younger and younger. People hear about these things. But I'm wondering how you are going to get the word out. Besides just Google, can you do a big ad campaign for something like this?
We do, and they do. We also we get a multiplier effect on our advertising dollars because each office, dermatologist, plastic surgeon, aesthetic provider, also advertises, and they advertise on their own dollars, sometimes through allowances from us. And they are good at social media. They're good at buying billboards. They're good at buying local TV time. But then we do national campaigns. We have a very large national campaign for Kybella right now. We have a national campaign for Botox. We have a national campaign for the Voluma or Juvederm family of fillers. As we integrate Zeltiq, which we only closed on last week, we will roll out a full national campaign. Well,
that's why I'm expecting something huge on that. I think that's gigantic.
And that is, we are just scratching the surface. That technology works. It's terrific, high patient satisfaction score, and everybody wants to be thinner.
I think that's going to be your big one for 2017, but there's so much here. This is Brent Saunders, President, Chairman, CEO of Allergan. I do believe you get a bargain right here because the stock was down. Remember, it's up very big from the bottom, but I think it's going to have a good 2017 and unbelievable 2018. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.